Hey guys, big news. Eubank has just announced a brand new loan product where you can borrow up to 90% of the home value without needing lender's mortgage insurance. Lender's mortgage insurance used to previously cost anywhere from, let's say, $5,000 to $20,000 depending on how much you're borrowing. So this is huge news. In this episode, I'm going to go through how this works, who it applies to, who it does not apply to, and how property investors can make the most of this, because it may not be here for long and you can save almost tens of thousands of dollars and get into the market faster. My name's PK and I help people build passive income through the Property Investment Accelerator using data without needing a $15,000 buyer's agent every single time. In this channel, we expose reality about the economy, property, and financial happiness. Let's go. By the way, the RBA just released last week new valuation for residential property nationwide, Australia-wide. It is now just ticked over $12 trillion. $12 trillion. That is the cumulative total for valuation for Australian residential property. Now, a lot of people who think the market's going to crash, they always say, oh, Australia's got huge debt, mortgage debt is huge. Well, actually, mortgage arrears is coming down, and of that $12 trillion, only 2.5 trillion is in debt. Only 2.5 trillion. I know that sort of blows your socks off and it doesn't seem right, but I've been following this for a long time, and that data has been correlated and triangulated with the RBA, ABS, etc., etc. So that means that the total LVR of Australian residential real estate is just 20%. 20%. Another way to look at it is 80% of the cumulative total valuation is completely paid off. Now that means that Australian residential real estate is in very good, stable footing, standing, grounding, and this is why Eubank has now come. And by the way, I'm not affiliated with Eubank. I don't really care if you use them or not. I don't get any referrals. In fact, I have zero vestige in this, right? But this is what they've recognized. Eubank has recognized that the Australian market is growing. Land values over the last 12 months have grown 6.5%. That's just land values. That doesn't incorporate additions or improvements to land, where the total valuation would actually go up for residential real estate well above 6.5. Just land itself has gone up 6.5% in the last 12 months. So what Eubank is saying is, guys, if you get a loan with us, we're going to give it to you 90% loan to value ratio, and we're not going to charge you lender's mortgage insurance. Lender's mortgage insurance is an insurance that the bank or the lender typically takes out if you give a deposit less than 20%. In other words, if your loan is above 80%. And the reason they do that is because they're like, oh, above 80% is a bit higher risk. This guy, what if he goes in arrears? What if he defaults? So we're going to take out insurance. So there's a reinsurance company that covers them for that. But Eubank has now recognized that Australian real estate is rising so fast that those people that get a loan at 90%, look, let's be realistic. If you know what you're doing, if you're educated, not necessarily if you use a buyer's agent or not, you might not work if you do, but if you're educated and you buy in the right area, then that 90% loan is going to come down to 80% real soon. How's that? Well, if you buy something for $500,000, $600,000, $700,000, $800,000, etc., etc., give it 6 months, give it 12 months, heck, in some cases, give it 3 months, and that valuation of that property is going to go up by $100,000, by $150,000. This isn't, whimsical. You can follow different markets, whether it's Perth right now, which is experiencing a second wind, whether it's the northern pockets of Melbourne or the inner east of Melbourne, or whether it's regional Victoria, regional New South Wales, or whether it's Queensland, which basically the entire Queensland is still rocketing along. These areas are growing, depending on the starting value, at around $50,000 every 3 to 6 months. So what NAB, which actually owns Eubank, has recognized is, hey guys, we can capture more of these customers by giving them a product where they know their valuation of the property is going to go up, hence the LVR is going to go down from 90 to 80 anyway. So why charge them LMI? In fact, we don't need to charge them LMI because we see our risk in lending to them at 90% LVR so low that we don't need to charge them LMI anymore. All right, this is the thought process of the bank, and NAB is one of the big four banks. It knows what it's doing in this regard, and I think other banks will follow suit as well. This is a market share grab for them. And so if you think the banks know what they're doing, and Australian banks are the most profitable in the entire world on a margin basis, then why not follow what the banks are doing and back the property market? I mean, if you do or don't, doesn't really matter. I don't care. Get a loan at 70%, get a loan at 80%, you'll still do well. But for those of you who maybe only have $60,000, only have $50,000, heck, maybe only have $40,000 in the bank or as equity, maybe you guys can't get into the property market, right? But this product, without LMI, you're saving maybe $5,000, $10,000, $20,000 in lender's mortgage insurance. You're able to get in to the market, whereas previously you would not have, right? And I think that's the critical thing. And it's open for both investors and owner-occupiers. So even if you're listening to this, watching this, you're like, hey, Pika, I'm an owner-occupier. Well, this applies to you too, because maybe you have $100,000, $150,000, but you still can't afford your dream home. Well, maybe through this product, whereas before you could only buy up to $1 million, now you can buy up to 1.3 million or 1.2 million because your loan amount is higher. Now, of course, there are downsides to this. This is not for refinances. Okay, it's only for new loans. And of course, because this is a slightly specialized product, your borrowing capacity might take a little bit of a hit, but on balance, because you're getting a higher loan amount, you'll still net better off. You'll still net getting a higher loan, but your borrowing capacity might struggle a little bit. I'm going to tell you something that might offset that in a second as well, though. All right, and of course the interest rate might be higher. Generally speaking, the higher loan you get, going from 70% LVR to 80% LVR to 90% LVR, in other words, 30% deposit, 20% deposit to 10% deposit. As you go up, normally the interest rate goes up as well to, compensate the bank for the additional risk that they're taking. In this case, yeah, you're probably looking at 0.5%, plus minus a bit, for accessing this product. But stick with me here. Let's say you really want to get into the regional Victorian market. Let's say Bendigo, I'm just making something up, right? Okay, and you can't quite afford a $550,000 property at a 20% deposit, especially because, at 10% deposit, you got to pay all this LMI, and you don't want to spend $15,000, $20,000 in LMI or $10,000, $5,000, whatever it may be. This product allows you to get into the market, right? Control a property at 550K, whereas before you couldn't. Now, fast forward 3 months, or worst case scenario in some suburbs in Bendigo or many other locations across Australia that are positively booming. Fast forward 3 months, 6 months, the market has risen anyway. That suburb has gone up, and then you can go back to NAB through Eubank, that is, and say, well, realistically, yes, I got a 90% lend, but my valuation's gone up like $50,000, $100,000. Now, realistically, this is an 80% lend or 75% lend, and they'll put you over to their normal product. So not only will your interest rate go down, which is fantastic, right? That's a huge thing, but you might actually have equity to form another deposit so you can buy another property. Now, normally I advocate for paying lender's mortgage insurance. I have always felt, and I've done it myself, and hundreds and hundreds of clients have across thousands of properties that they've bought, that lender's mortgage insurance, yeah, it's a cost, but it's a cost of doing business, all right? So if you can get into the market by putting down less than 20% deposit because you don't have that much, then getting in the market is better than not getting in the market because the property prices are rising. And if you don't get in now, will you be able to get in the future? Well, that's an open question. So normally lender's mortgage insurance is a ticket to play. It's just something you gotta swallow. And over 5 years, it's actually tax deductible. So if you're paying $10,000, then you can deduct $2,000, every year. So that's a good thing. That reduces your taxable income. And also, it's not like you have to pay this out of pocket. The lender's mortgage insurance, let's call it 10, 15, whatever it is, it gets added to the loan amount. So yeah, the loan amount is going to increase, but the additional or incremental interest that you pay on that is going to be like maybe another $100 a month. So once again, negligible. And as long as you're following the data, then that property is going to be increasing tens of thousands of dollars in the first few months alone. And hence, you'll be able to refinance down to 80% again and do away with that lender's mortgage insurance. So that's, that's like a really smart way to use lender's mortgage insurance. But in this case, you don't even have to use it. So it's like an added bonus that Eubank is allowing. Now, I have to say that this product at the moment is only for principal and interest. It's only for principal and interest loans. So once again, you might be telling yourself, I can't afford principal and interest, right, on this investment property. And normally I advocate for, well, depends on the person, depends on the strategy, but initially as you're aggressively growing your portfolio, I do advocate, generally speaking, there's exceptions to interest only, because you're trapping that surplus cash flow and forming another deposit with it. Of course, we have exit strategies, so you're not just kicking the can down the road forever. We're not using our hard-earned savings to pay down the principal. We're buying multiple properties, letting them double, triple over time, and then selling some and using those profits to pay off the debt on the ones that we don't sell. And that's a really smart strategy. That way you can buy more properties, become richer than just buying one or two and paying principal and interest. But this Eubank loan, it does require principal and interest. But once again, give it 6 months, give it 3 months, give it 9 months. Once the valuation has gone up and it's now at 80% LVR, you can go back to the bank and say, I no longer need the specialized product, put me over to your normal product, and they'll flip you over to interest only if you want. So I think this is a really fantastic product. I encourage everyone to make the most of it if you think it's right for you. Right now, the property market is positively booming. You know how I said before how land valuations have gone up 6.5% in the last 12 months in Perth? It's actually more like 29.5%. Okay, in Queensland, it's growing at double digits too. So I think the first homeowners grant, the guarantee where the government is backing you for 5% deposits, that's really rocketing the market right now, and the full effects are yet to be seen. It's going to be a great end to the year in terms of property, and January is going to be a huge month. Get ahead of that, but first we'll get educated, because it's a mixed market. All right, it's patchy. It's not that you can buy anywhere in Melbourne and make money right now. You have to be educated, and don't outsource those decisions, because no one cares about your money as much as you do. Guys, check out this product. Share this episode with someone who you think will benefit from it. Hit the subscribe button, give it a like, and I'll see you next time. My name's PK. Thank you so much for always being a part of the community and lending me your attention. Thanks, guys.